Welcome to the deep dive. Today we're unpacking the story of a company that, well, just a few years ago, pretty much transformed global medicine with a single vaccine.
That's right.
Now, Moderna, ticker symbol mRNA, stands at this really fascinating crossroads. I mean, its stock closed at $27.16 on June 27th, 2025, but our deep dive today suggests an intrinsic value range that's actually significantly higher.
It does, suggesting the market might be missing something important here.
Exactly. And we've already seen this morning a pretty dramatic surge just from some exciting flu vaccine news. So we're here to uncover what that really means for Moderna's future and, ultimately for you.
Yeah, let's get into it.
Here on the deep dive, our mission is pretty simple. Cut through the noise, distill these complex topics, and pull out the most important insights just for you. Today, we're sifting through Moderna's core business, taking a look at its management, analyzing its financial health, and checking the pulse of market sentiment, all as of June 30, 2025.
Right. The goal is really to help you understand if this platform on trial, as we're calling it, can genuinely dominate the future of medicine.
Or if, maybe, its brightest days are already behind it. It's a big question.
It is.
So, to navigate this compelling landscape, we've structured our deep dive into two main parts. Part one will lay the foundation, the business, the leadership, the financials.
And then in part two, we shift focus, look at market sentiment, who owns the stock, the key risks, and then try to bring it all together in our conclusion.
Okay, let's jump right in and really unpack what makes Moderna tick. Chapter 1, Business Analysis.
What's truly fascinating about Moderna, I think, is how fundamentally different their business model is from, traditional pharma. They famously call it the software of life, which is just a brilliant way to frame it.
Yeah, I like that analogy.
Right. mRNA is the operating system, and each vaccine or therapy is like a piece of software. Basically, they design these strands of messenger RNA, think of them like tiny instruction manuals that tell your body's cells to produce specific proteins. And those proteins then teach your immune system how to fight off or treat a disease.
And for a while there, that software delivered some pretty historic returns.
Oh, absolutely. SpikeVax, their COVID-19 vaccine, that was their meteoric success story, generated over $19 billion in revenue in 2022. Just huge numbers.
Incredible.
But, that was very much a pandemic-driven thing. And as the world sort of moved on, sales dramatically declined, down to just $3.1 billion in 2024.
Wow, quite a drop.
Yeah, and the crucial insight here isn't just the drop itself, it's that it highlights the temporary nature of that kind of revenue. Their second product, mRESVIA, an RSV vaccine for older adults, launched in 2024.
Right, I remember that.
But initial sales have been, minimal, almost negligible, really. So the core takeaway is pretty clear. Moderna's entire valuation now hinges almost entirely on its pipeline. What's next coming out of the lab?
Speaking of that pipeline, there's been some genuinely groundbreaking news today, hasn't there?
Absolutely. Hot off the press this morning. It's about their seasonal influenza vaccine, mRNA 1010. Positive phase 3 results showed superior efficacy compared to an existing licensed vaccine.
Superior efficacy. Okay, that's not just good news. That sounds like a really big deal.
It is. It's a potential blockbuster. We're talking a market worth over $7 billion a year. And importantly, it significantly de-risks their platform, showing it can work well beyond COVID.
Right. Proof of concept again.
Exactly. And beyond flu, they have other late-stage candidates, like the flu-COVID combination mRNA 1083. They're targeting that for 2026 approval.
A combo shot. Interesting.
Yeah. And critically, there's their cytomegalovirus, or CMV, vaccine mRNA 1647. That's in pivotal phase 3. And the key thing here, there is no currently approved vaccine for CMV.
Really? None at all?
None. And CMV impacts millions. It can cause severe birth defects. It's a massive unmet medical need. Then for cancer, they also have an individualized neoantigen therapy. mRNA's Thor-157 partnered with Merck.
Personalized cancer vaccines. That sounds like science fiction.
It almost is. It basically teaches your own immune system to fight your specific tumor. And it's shown positive 3-year data in melanoma. So yeah, the pipeline is broad and ambitious.
So they've really transformed, haven't they, from this small clinical stage firm to a global commercial entity. And they've got brand recognition way beyond just investors now.
Absolutely. And their primary value proposition, it really shines through. The mRNA platform's speed, its flexibility, its adaptability, it lets them design rapidly, target new viral strains super quickly.
Like with the flu vaccine updates.
Exactly. And even combine multiple vaccines into one shot. That's a powerful offering. The question is, is the market fully appreciating that potential?
Well, is the market opportunity there to support it? What does the mRNA market itself look like?
Oh, the market opportunity is huge. The mRNA market itself is seeing explosive growth. Conservative projections put it over $18 billion by 2030. More aggressive ones, over $138 billion.
Okay, huge range, but big numbers either way.
Right. The takeaway is the sheer scale of the bet on this technology. And the growth is driven by diversification, beyond COVID, into oncology, rare diseases, even using AI for drug discovery.
And competition, who are they really up against?
Well, Pfizer and BioNTech are the primary rivals, obviously with Comirnaty.
Yeah.
And they have their own deep pipeline. GSK is very strong in the RSV market with RXV, so they're competing directly there. And BioNTech buying CureVac recently just consolidates things further. It's a competitive space.
And I imagine with any cutting-edge tech like this, there are serious regulatory hurdles, barriers to entry. How does Moderna navigate that? It can't be easy.
No, it's definitely not easy. The regulatory path is still evolving, right?
Right.
There's no specific mRNA guidance, so these treatments get regulated as biologics or gene therapies, which means a very stringent, often lengthy approval process.
Okay.
However, a potential advantage is the billions of COVID vaccine doses already given. That provides unprecedented real-world safety data, which could help de-risk future candidates in the eyes of regulators.
That makes sense. But what about barriers for others trying to get in?
They are formidable. Extensive intellectual property. Moderna has thousands of patents and is, currently in high-stakes litigation with Pfizer and BioNTech over them.
Right, the patent lawsuits.
Yeah. Plus, manufacturing is complex and incredibly costly. And R&D itself, clinical trials. We're talking billions of dollars with very high failure rates. This is definitely not a business for the faint of heart or light of wallet.
So despite those huge barriers, what are Moderna's real competitive advantages? What helps them potentially win this race? What's unique?
I think their most unique asset is arguably their proprietary mRNA design studio. It's this cloud-based software platform that dramatically accelerates early R&D. They can go from an idea to a testable candidate in weeks.
Weeks, not months or years.
Weeks, that speed is a potential game changer. Then there's their brand strength. Becoming a household name during the pandemic, that's a powerful asset. It builds trust.
Sure, people know the name.
Exactly. And the platform nature of their tech potentially allows for quicker, cheaper development and scaling of new vaccines, a possible cost advantage down the line. And finally, they have that end-to-end experience now. They've taken 2 products from R&D all the way to global commercialization.
That experience counts for a lot.
It does. And this recent flu vaccine data, like we said, it's a tangible step.
Yeah.
It challenges that whole one-product company narrative and signals the platform can deliver beyond just COVID.
Chapter 2, Management Evaluation.
This brings us to a really critical point. How has management, particularly CEO Stefan Bancel, handled the immense pressure of this post-pandemic reality?
Yeah, navigating that revenue cliff must be intense.
Absolutely. Bancel's been there since 2011, scaled the company into this global powerhouse. And it's worth noting he's a significant shareholder himself, owns about 5.5% of the company. So ideally, his interests are aligned with yours.
Okay, that alignment is usually seen as a positive.
Right. Their current response to the revenue cliff has been this strategic pivot towards what they call discipline and focus, which sounds good. But what does it mean? Well, concrete actions like right-sizing manufacturing, significant cost-cutting, and really ruthlessly prioritizing their R&D pipeline.
Makes sense. Any controversies we should be aware of?
Yeah, we should acknowledge them. There were some executive stock sales back in 2020 that raised eyebrows, and that $400 million patent dispute settlement with the NIH over the COVID vaccine technology. So not a perfectly clean slate, but they seem focused now.
And where are they putting their money, capital allocation-wise?
It's crystal clear. Internal R&D. The overwhelming majority of their capital, like $4.5 billion in 2024, projected $4.1 billion for 2025, goes straight into the pipeline.
So they're betting big on their own labs.
Completely.
Really?
Their ambitious goal is up to 10 new product approvals by 2027. Their M&A strategy is pretty subdued, actually. Small strategic collaborations like with Merck and AstraZeneca or little tech acquisitions, not big, splashy, revenue-generating deals.
No dividend either, I assume.
No. Typical for a growth stage biotech, reinvesting heavily, and share buybacks have been pretty limited too.
Okay, so if we look at return on invested capital, ROIC, how does that stack up? How well are they turning these investments into profits?
Well, this is where the story gets dark again. ROIC has been deeply negative. negative 32.3% in 2024, negative 29.27% on a trailing 12-month basis.
Oof, negative 30%. That sounds, well,
It does, on the surface.
yeah.
What it really signifies is that right now, from a purely accounting perspective, their massive spending on future drugs is actually destroying value, but you have to see it in context.
Okay, what's the context?
It's the calculated upfront cost of this high-stakes gamble on the pipeline delivering future blockbusters. They're burning cash now, investing heavily, with the expectation of huge returns later if these drugs hit. It's the essence of their strategy.
So management is making a very deliberate, bold bet on their technology. Even if it hurts the bottom line right now, they're hounding on those future breakthroughs.
Exactly. They're counting heavily on the late-stage pipeline flu, RSV, CMV vaccines hitting blockbuster status, the oncology program with Merck succeeding. Today's flu results are a massive step in validating that bet. They believe the platform's speed and the sheer number of shots on goal will eventually pay off.
Chapter 3, Financial Analysis. All right, let's peel back the layers and dig into the cold, hard numbers. And this is where Moderna's story gets particularly intense.
Yeah, the numbers tell quite a tale.
Their market cap is around $10.5 billion now, June 2025. That's just a shadow of its pandemic peak.
A dramatic decline, absolutely. And revenue growth illustrates that boom and bust cycle perfectly. Peaked over $19 billion in 22, then bam, fell sharply to just $3.2 billion in 2024.
And profit margins must have followed suit.
Completely. Gross margin was an incredible 75% in 2021. Now, deeply negative, negative 85.6% in 2024. Operating and net margins also sharply negative.
Wow. And free cash flow, burning through cash now.
Significantly. Shifted from massive positive flows during the pandemic peak to a significant cash burn, roughly negative $3.2 billion on a trailing 12-month basis. They're funding that burn from their existing cash reserves.
Okay, so how stable are they financially despite that burn?
Well, earnings consistency is non-existent, highly volatile, big profits to big losses, so historical earnings. Not a reliable guide at all for the future.
Right.
But a crucial strength is their balance sheet. Very little debt. That's a huge plus. It lets them plow almost everything into R&D. And their current ratio is exceptionally strong, 4.22 in Q1 2025.
Meaning they have lots of short-term liquidity.
Exactly. Thanks to that large cash and investment balance, $8.4 billion, it's a financial fortress, really. And like we said, no dividend expected anytime soon.
Okay, so given these wild swings, negative earnings, traditional valuation metrics like PE are useless, right? And you said PS is misleading too.
Totally ineffective. Negative PE tells you nothing. And price to sales at 3.3x looks okay, but it's based on declining sales, so it's not really helpful.
So how on earth do we value a company like this then?
This is where we have to look forward, not backward.
Yeah.
We use something called a discounted cash flow, or DCF model, essentially trying to predict the future cash flows from that pipeline.
The potential earnings from the flu shot, the CMV vaccine, etc.
Precisely. Then you apply probabilities of success for each drug, because not all will make it. And you discount those potential future cash flows back to today's value using a discount rate that reflects the high risk involved.
Okay. Sounds complex, but it focuses on the future potential.
Exactly. And based on an educational DCF model, using consensus peak sales estimates for those key assets, flu, RSV, CMV, oncology, and applying a frankly higher than average probability of success, around 69% for the late-stage drugs because of the platform validation, and using a discount rate of 8-10% to reflect that high biotech risk, we arrive at an estimated intrinsic value range of $35 to $55 per share.
35 to 55. Okay, so significantly higher than the current price.
Correct. So if you connect this to the bigger picture, the income statement looks distressed, right? Big losses, falling revenue. But the balance sheet, with that $8.4 billion in cash, it's a fortress. That cash is the bridge funding the R&D engine.
Got it.
And the central investment question really becomes, can they create enough profitable products before that cash runs out? The clock is definitely ticking.
Part 2, the horizon. Okay, we've seen the internal picture, the financials, the strategy, the huge R&D bet. Now let's look outward. How is Wall Street, how is the broader market reacting to all this? Let's talk market sentiment. Chapter 4, market sentiment.
Well, Wall Street sentiment towards Moderna is pretty divided. The consensus among analysts is technically a hold, but the price target range is enormous.
How wide are we talking?
Like $26 on the low end, all the way up to a very bullish $230 on the high end. The average is around $47. The median is over $100. It just shows.
Wildly different opinions.
Exactly. It's a company with a real division of opinion. The most immediate news impacting it, of course, is today's positive flu vaccine data, which caused that nearly 5% jump in pre-market trading.
Right, a clear positive reaction there.
Definitely. Before this, the general media tone was mostly cautious, maybe negative, focusing on the revenue decline. Though you do get these recurring spikes of interest whenever pandemic preparedness, like H5N1 avian flu, hits the headlines.
Okay, and what about market indicators, things like short interest?
Short interest is notably high, somewhere between 9.5% and maybe almost 12% of the float, depending on the source. That's significantly higher than the peer average of around 5.6%.
So a lot of people betting against the stock, making it a battleground.
Absolutely, it's a classic battleground stock, which also means there's potential for a short squeeze if more positive news keeps coming, like today's flu results.
Where the shorts have to buy back shares, pushing the price up faster.
Precisely. Looking at its price versus moving averages, it's currently trading slightly above its 50-day average, which suggests some short-term positive momentum, likely helped by this morning's news.
But long term.
Still significantly below its 200-day average, which indicates the longer-term trend remains, well, bearish for now.
So the market's view is really a study in contrasts then. Long-term bearish trends bumping up against fresh, bullish news.
Exactly. It creates this really volatile environment where the outcome could depend just as much on this sentiment battle as on the actual underlying results coming out of the company.
Chapter 5, Ownership Structure.
Okay, so who actually owns Moderna? It's heavily institutional. Large institutions hold roughly 73–74% of the shares.
So big money managers.
Yeah, big players. Includes passive index funds like Vanguard and BlackRock, but also active growth managers like Bailey Gifford and some high-conviction investors like Thelen Partners. Moderna is actually over 8.6% of their portfolio.
Wow, that's a concentrated bet for them.
It is. Insiders, including CEO Bansal with his 5.5%, collectively hold a decent stake too, around 6.6% to 7.3%.
But there's a but.
Yeah, the recent activity is interesting. It shows a very clear pattern of selling by insiders. And critically, zero open market purchases by insiders in the last 90 days.
No insiders buying shares on the open market, even at these lower prices. That's noteworthy.
It is noteworthy. It suggests perhaps that the people who know the company best aren't rushing to buy more right now. Maybe they're waiting for more proof or just taking profits from earlier gains. The ownership is also relatively concentrated. The top 25 shareholders own over 61%.
Meaning their decisions can really move the needle on the stock price.
Definitely. Their buying or selling can have a significant impact.
Chapter 6. Risk assessment. Okay, every investment carries risk, and Moderna, well, it seems to have its fair share. Let's try to frame this using a SWOT analysis. Strengths, weaknesses, opportunities, threats. What are the core strengths?
The biggest strength is undeniably that pioneering mRNA platform. Its speed, its adaptability, its core. Then you've got strong global brand recognition from the pandemic. That $8.4 billion cash position is a massive strength, a real financial cushion. And, of course, the broad, diversified late-stage pipeline we've talked about.
Makes sense. Now, the weaknesses. We've touched on these.
Yeah, the big ones are that revenue concentration and the dramatic decline from Spikevax, the high cash burn rate needed to fund R&D, the unproven commercial execution, highlighted by Via's lackluster launch so far, and the current negative profitability. Those are significant hurdles.
Okay. What about opportunities? Where's the upside potential?
Huge opportunities.
Yeah.
Potential new blockbusters from the pipeline flu, the flu-COVID combo, CMV, market expansion into entirely new areas like oncology, rare diseases, and that competitive advantage of combination vaccines offering more convenience.
Right. Now for the threats. What external factors could really derail things?
Well, intense competition is a big one. Pfizer-BioNTech, GSK, these are giants. That high-stakes patent litigation with Pfizer-BioNTech is a major threat. Losing could cost billions and undermine their IP.
Yeah, that lawsuit looms large.
It does. Regulatory hurdles are always there. Trial failures, delays, unexpected safety issues. That's just part of drug development. And then there's pricing pressure, especially in healthcare, coupled with public perception challenges, like general vaccine hesitancy, which could impact uptake even if the drugs are approved.
And macroeconomic threats. Inflation, interest rates.
Yeah, those play a role too. Inflation obviously impacts costs. Rising interest rates historically make investors less willing to pay up for high-risk, long-duration growth stocks like Moderna. And you could even imagine hypothetical things like U.S.-imposed tariffs in 2025 impacting supply chains, though maybe less severe given their manufacturing footprint.
So, synthesizing all that risk, what's the crux of it?
Really, Moderna's future hinges on its formidable internal strengths. The platform, the cache, the pipeline, prevailing against these significant external threats. Today's flu data is a tangible de-risking step. It provides some validation. But commercial execution, especially after the RSV experience, and those legal battles remain very real risks. It's fundamentally a bet on internal innovation overcoming some pretty strong external headwinds.
Chapter 7, Conclusion. Okay, so after this deep dive, crunching the numbers, looking at the science, the market, what's the final takeaway for you? What's the bottom line here?
Well, let's frame it as the bull case versus the bear case. The bull case is compelling, right? Moderna has this revolutionary tech platform, proven speed, now validated again by the flu data. It's backed by that fortress balance sheet, over $8 billion in cash, and a deep, diversified pipeline targeting huge markets.
So the argument is the current stock price reflects too much pessimism.
Exactly. The bull case says the market is overly focused on the past revenue decline and offers a compelling long-term entry point if you believe in that platform's potential.
Okay, now the bear case.
The bear case points squarely at those collapsing revenues and the high cash burn. It highlights the disappointing ResVia launch as evidence of potential issues with commercial execution beyond the unique circumstances of COVID.
Raises doubts they can actually sell the next wave of products effectively.
Precisely. Then there's that existential patent battle with Pfizer-BioNTech, which is a massive overhang. And the stock is in a long-term downtrend, with, as we noted, no recent insider buying. That's a concerning signal for the bears.
So bringing it back to valuation.
Right. As we said, traditional metrics don't really work here. Our educational DCF model, which tries to capture that risk-adjusted pipeline potential, suggests that intrinsic value range of $35 to $55 per share.
Okay, 35 to 55.
Yeah.
So pulling it all together then, Moderna's current share price, around $27, sits significantly below our estimated intrinsic value range. What does that tell us?
It suggests the market is heavily discounting its future potential right now. It's weighing those risks, the cash burn, the competition, the litigation, more heavily than the opportunities presented by the pipeline and the platform.
Okay.
And while today's flu vaccine news is definitely a major positive step, it de-risks the platform, shows versatility. The lackluster RSV launch and that ongoing patent fight are stark reminders that the risks are still substantial.
So, final verdict.
Ultimately, Moderna is a classic high-risk, high-reward investment. It seems best suited for long-term investors who have a high tolerance for volatility.
You need a strong stomach for this one.
You really do.
Yeah.
And you need to believe in management's ability to execute that platform strategy and actually bring these promising pipeline assets successfully to market. It's really a bet on the future of medicine powered by mRNA.
This really gets you thinking, doesn't it? What stands out to you about Moderna's journey? And maybe consider this. If Moderna's mRNA platform truly represents a paradigm shift in medicine, capable of rapidly developing vaccines for everything from the flu to personalized cancer treatments, does its sheer ability to adapt and innovate maybe transcend these current commercial hurdles? Could it promise a future impact far greater than today's challenges suggest? Something to ponder. Thank you so much for joining us on this deep dive. If you found this valuable, we'd really appreciate it if you'd like and subscribe to the Stock Analytics AI YouTube channel. And remember, members can suggest stocks for future deep dives right there in the comments. We do pick them up. For just $4.99 a month, members get priority deep dives on tickers. And over the next few months, we're planning to cover all of the S&P 500 stocks. So members get exclusive priority access to that.
Yeah, lots of content coming.
Definitely. And if you just want a one-off deep dive on a specific stock, you can always drop us a super thanks.
And please, always remember, this analysis was generated by an AI system. It's for educational purposes only and should absolutely not be considered financial advice. Always, always conduct your own thorough research or consult with a qualified financial advisor before making any investment decisions.
Sound advice. Thanks again for tuning in.